Let me bring Doug Flynn, our money man, in a little earlier than we usually do in the program and talk a little bit more about this. Good to see you, Doug. And I think the question becomes, like I was saying to Kelly, it's like, all right, you have the growth. You're in a pretty good spot. You're going to go after Powell. We get it, for not cutting rates. And what happened with the rates today is really interesting. Like I mentioned right at the top before we started talking about the Kamala Harris story. It's really interesting because it's not just Powell. Like there's a whole board, right? The Federal Open Market Committee got a whole board, and two people on the board were dissenters. In other words, they didn't agree with Powell.
That's right.
Today to keep rates, and that doesn't happen often. Sometimes you get one, but you don't often get two. So there is some disagreement. What do you think? Explain to people, because is my logic wrong? Some people do make the argument I just made. It's like, all right, we got pretty good growth. Why we don't need to boost the economy by cutting rates?
Yeah, I mean, having two members dissent it's the first time in 32 years, so it is not a common occurrence. And what that's telling you is there are people who believe that rates should be cut, and two of them happen to be on as members of the board there. But the 3% number is kind of expected on GDP because of how negative it was last quarter, because of the advanced purchases of all the imports to try to get ahead of the tariffs. So that reversed, and so we kind of expected outperformance on the GDP number. But if you strip that out or put them together, let's say, put them together the full 6 months, GDP is actually only running at a 1.2% annualized rate over the past 6 months. So while this number is good, and we expected President Trump to tout it all day long, the backdrop is that the economy, while it's growing, is growing at a slower and slower pace. And so that's the argument that rates could be lowered, even though you have a good, strong GDP number. And then the Fed's favorite inflation number, which is the PCE, which is the Personal Consumption Expenditures Index, is coming in at 2.1%. And 2.1 is very, very close to their targeted 2% number that they've touted. For whatever you think of that 2% number, we're right there. So almost like not lowering rates in September. He's starting to look more political when you have these factors that are building there to make the argument to lower it, and now you have the two members of the Fed here also saying rates should be lowered. So we're looking to September, and those possibilities are rising that that's going to happen. Okay, you may not do it, but it looks like you could. Now, let me do one thing here. I'll play a quick clip of Powell, because as he's still speaking over there at the Fed, answering questions. I think it's funny that Kelly passed along that little anecdote that he said he had a good meeting with Trump. Okay, it was an interesting meeting, at least the public part of it that we saw, the two of them in the hard hats and everything else. Good meeting, says Powell. But on the substance of what you're talking about, he did make some comments about kind of the outlook and why, you know, he still has this uncertainty, I guess, based on the tariffs. Anyway, here's the chairman, Jay Powell.
Government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance.
Okay, you understand all that, Doug? But, you know, to be give us the quick translation on how you think he's thinking. That's CYA speak. I understand that part. I know what that stands for.
Yeah, so, hey, look, the consumers spent 1.4% higher this quarter. The expectation was 0.5. So the consumer spending, there's problems with the labor market, and that's what the Fed should be focused on. If you just call a victory lap on inflation, he doesn't want to call it yet, and so that can be seen as political if it actually doesn't happen. If the tariffs do not result in inflation to any degree, then you focus on the labor market, and that is weakening. And so, you know, look, residential housing is down 5%, and that's a big drop, and it has everything to do with the high rates. And so you're teetering here. You're getting close to the cut. This is just, you know, if he doesn't want to do in September, this is the kind of speak you get to just, you know, give you a reason why I don't want to do it. But there's a lot of reasons to do it, and I might argue more reasons to do it than to not do it. But ultimately, it's going to come down to that. So you may even see more dissent, or he might just say, okay, September's the month. Right now, the markets are saying 60% likelihood in September. I suspect that might go up a little bit. But look, anything can happen. And if suddenly the tariffs cause a massive rise in inflation, all bets are off on that. But that doesn't seem to be the case, at least not yet. So this is some of that Fed speak, if you will, to get us to September.
To cover, you know what? Now, I think you're right. You might be right about that. And I think it's interesting to talk about what might happen in the future. But I also think it's interesting that two dissenters entered the room today at the Fed. You don't see it often, like you say, 30 plus years. Thank you, Doug. Let's go back to our